Welcome to Financial Issues, where we join reality with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Good morning. Welcome to Financial Issues. I'm your host, Shana Burt. Today we're going to be talking about financial issues. We're a stewardship ministry, and our goal is to help you be found a good and faithful steward one day when you get to meet your master and you're asked about how you handled the time, talent, and treasure that you were trusted with. So on today's show, we're going to talk a little bit about long-term care insurance. We're going to get to the latest market and economic headlines. And later in the show, we hope that you will stay tuned for the whole show today, because we're going to give you the only reason that you will need to make sure that you get to the ballot box this election season. And of course, our phone lines are open. So if you've got a call or question, get it queued up now. 610-363-1110. So you may have noticed that Seth and I, I don't know if you've seen Seth yet, but we're kind of Twinkies today.
Count yourself blessed right now.
We're kind of Twinkies today. We're wearing the spineless weasel shirts. So, Seth, you want to tell them about this?
Yeah, I'd be glad to, Shana. So as you folks know, election season, full swing here. We've got an election coming in 2 weeks. So we want to give this awesome piece of merch as a gift for you all. So if you make a donation to the ministry of any amount, we will give you this awesome Spineless Weasel shirt, and we'll throw in the Spineless Weasels tumbler also, Shana. We'll also give this away to our first two callers. But we want to make our voices heard, Shana. You know, we are frustrated with the Spineless Weasels of Washington, D.C., both sides of the aisle, and so this No More Spineless Weasel shirt is not only a tribute to our founder, Dan Celia, who really kind of coined that term, but also is a way for you to make your voice heard. Some of our team members, Shana, are planning to wear their shirts on election day as they vote. That's a great idea. I'm planning to do that as well. So you got to get your hands on this shirt early so that we can send it to you with enough time for you to be able to get your hands on it for November 5th. So fism.tv/donations is where to go, Shana. fism.tv/donations.
Yes, we are equal opportunity critiquers.
That's right. That's right.
Well, let's get to some wisdom from the Word of God.
All right.
Our stewardship verse today comes from James 5:1-2. Come now, you rich, weep and howl for the miseries that are coming upon you. Your riches have rotted, and your garments are moth-eaten. I guess that includes your Spineless Weasel shirt.
That's right. Unfortunately, it will not be taken with you eternity.
Right. So, Scripture says that rain falls on the righteous and the unrighteous. And, money can never really be depended on for salvation. That is found in Jesus Christ alone. What do you think, Seth?
Yeah, it's really good, Shana. This verse, in addition to what you just said, it highlights the folly of riches. Every single piece of wealth that we have, whether liquid or not, someday will be worth nothing. And in the final analysis, they're worth nothing. What we need to do is invest in the riches that will never fade. And that's by living for Christ every day, building up those treasures in heaven. Of course, those things aren't what saves us, Shana. That's really kind of icing on the cake. But nonetheless, I can't even imagine the glory that awaits us with those treasures in heaven that we'll receive once we get there. Going to be truly amazing. So I'd encourage all of you to focus on that first. Focus on that first.
Amen.
Yeah.
Well, we've got a question, don't we?
Yes, we do have a question. Thank you. Sorry, I was taking a drink of water there. So a good question here, Shana, from Carol. The question is this. A certain insurance company has an asset care recurring premium whole life insurance program, basically long-term care and inflation protection policy. I saw how much it costs to care for my mom. Are you familiar with this? And could you share why this could be a beneficial plan, or would this be something to steer away from? We're so thankful for you, your team, to have a place to go to ask these kind of questions. Carol, that's awesome. Thank you. So she's 67, Shana. The first question that I will ask you is this question. She mentions premium whole life insurance. What are your thoughts on that exactly?
Okay. So we need to back up just a little bit.
Sure.
Carol's question is not really just about plain old life insurance. Her main question is about how to cover the cost of long-term care when a person experiences that. Now, Carol has had a very valuable experience, and it's sort of a common experience. You know, the statistics tell us that about 70% of people who make it to age 65 or older will need some sort of long-term care during their lifetime. So that kind of care for most people begins after age 80. For the majority, care is often progressive, and it doesn't start, for the most part, until after the age of 65. So the majority of care happens, and we're thinking, nursing home, home health care, assisted living, those kind of things, begin for the majority of all people after age 65, but really the bulk of it happens around age 80 or later. So once care is started, women typically require longer-term care than men do when they get into that situation, and that's pretty much because of life expectancy of women is longer than for men. Women tend to receive care for an average of 3.7 years, while men require care for 2.2 years. So the cost of long-term care or long-term care, when you think about that, can be found in various forms. Like I mentioned, a nursing home, in-home care. There's such a thing as adult daycare. There's assisted living facilities, so on and so forth. And that care can be very expensive. Costs will vary depending on your location, where you live, and the type of care that you're seeking out. A private nursing home, a stay in a private nursing home can cost as much as $7,500 a month on average.
Wow.
Assisted living costs are in the $3,500 a month range. So how do you pay for something like that? Well, long-term care is primarily funded across the board by Medicaid. That is the government program for people who are destitute. So 42% of long-term care is actually paid for by Medicaid. I would suggest to you that that's not sometimes for a lot of people it may be the only alternative they have, but it is not the best. Medicare only pays for 18%, because you may be thinking, at 65 I have Medicare and that should cover everything for me. Well, Medicare will only pay if you meet certain requirements, like you have to jump through certain hoops. You have to be discharged from a hospital to a long-term care facility, and then Medicare only pays for up to 100 days if you even meet the qualifying circumstances. So there's a couple of strategies that you can use to pay for long-term care when and if you need it. The first one is to use your own assets. Use the assets that you've grown, that the Lord has provided for you. But at $50,000 to $90,000 a year in cost to pay for long-term care insurance, how long will your assets last? When you look at the total balance of what you have. And what if you have a spouse that is younger than you, or in better health if you're married? What if you use up all of your assets to pay for one spouse's care, and then what happens, to the other spouse? The other option is that you can rely on the government. But again, you must be destitute to qualify for Medicaid. That means that you have to have spent down the majority of your assets. You can still keep your home. There's even a 5-year look-back period, so you can't decide, mom's probably going to need care in the next 6 months. Let's put everything in the name of the kids just to keep her from spending that and save the inheritance for the kids. I have a sort of a moral issue with that as well, but you can really forget about the private room if you're going to go the Medicaid route, and you're not really going to have your pick of where you want to go. You're going to have to go somewhere that accepts Medicaid payments. Or the third option is that you can transfer that risk. So that's really what Carol's asking here. You can transfer the risk to an insurance company. So the cost of receiving long-term care, as we've already determined here, is expensive. Therefore, it is expensive to transfer that risk as well.
Shana, this is a tough conversation. I'm glad that you're bringing this stuff up, though, and I'm with you as well, with kind of having a funny feeling about what you were saying earlier, with basically trying to just reach down into poverty so you can qualify for a government benefit. Just something about it doesn't sit right to me.
Yeah. Yep. Well, there's a couple of things that you need to remember too. If you're going to transfer the risk, if you're going to use insurance to transfer the risk, there's several different options. But number one is that you have to be insurable. You don't have to necessarily have pristine health, but you have to have no major health problems. So one option for insurance is long-term care. If you get it when you're young, I think the sweet spot, they say, for long-term care is to try to purchase it between the ages of 55 and 65. It can be somewhat affordable. On average, for a couple age 55, $2,100 a year. If you wait to 65, that cost almost doubles. But keep in mind that most people don't even use it until between ages 65 and 80. So that means that you're probably going to plan on thinking around $50,000 on average into that policy. And you should not expect those premiums to stay the same. Well, Juliana's going to hate us today for having to edit this, but we're going to have to finish up these thoughts on the other side of the break. Folks, I hope that you'll stick with us because we've got more financial issues to come.
When I took the test, I knew that I had other options. I was really scared. I know that it's really easy to get an abortion in New York. I've been down the other road before, and it really was a negative experience for me. And it felt like I did it because it made things easier for my partner at the time. And this time I thought, I think I want a different story. I'm just really scared. And she said, we'll take it a page at a time. It felt scary, but it felt like a good thing. I'm gonna have to, if I have this baby, I'm gonna have to do it alone, and that's gonna be really challenging. But I wanted to do it. But I knew that I needed help, and to get around people that would help me, not people who would say, this is a problem that we can make go away. More like, this is awesome, and we can help you make it more awesome.
How is Timothy Plan continuing to lead the fight as you guys now enter your fourth decade of leading this fight of biblically responsible investing?
We've been too silent for too long, and we can no longer be silent. You stand up, like Ronald Reagan said, we're only one generation away from losing all of our liberty. Yeah. It has to be fought for. I wish it didn't. And you can fight for it. You don't need guns and ammunition and that. You can fight for it, especially with your dollars, because it's always about the money. And when the money starts impacting people, they start paying attention. When we launched this, they said it couldn't be done, but here we are 30 years later. They said you couldn't get competitive returns, but here we are.
What a tremendous testament of God's grace.
Go to financialissues.org/Timothy Plans to learn more about Timothy Plan.
Welcome back to Financial Issues. I want to wrap up my thoughts here on Carol's question. It was a really great question. It was about how to cover the future potential cost of long-term care. So Carol's just been through a situation where she helped to take care of her mother, and she experienced firsthand how expensive it can be to pay for that kind of care when you need it. So to get to Carol's specific question, she's asking about a whole life policy with long-term care coverage kind of built into it. So I do like this option a little bit more than just the traditional long-term care insurance, although the long-term care insurance policy could be a little bit more affordable because it doesn't preserve much money to pass on. So, there's kind of a sweet spot. You have to, look at what you have to protect. So if you don't have a lot of assets to protect, then you may just, be kind of forced to go with the option of paying for what you can pay for and then, relying on a government program to pay for the rest of it. If you have a lot of assets to protect, that means that that those assets are going to be able to generate perhaps some money to pay some premiums for you to be able to transfer the risk. And then when you get into transferring the risk, you've got the traditional long-term care policies. and I kind of gave some estimated cost for those. You do have to be insurable, so you have to get it at an age when you can qualify for the coverage, and then that typically means that you're going to be planning on paying premiums for a long time. With long-term care, traditional long-term care insurance, I would not expect the premium to stay the same. Inflation is real. We talk about that a lot on the show. It's been elevated in the last 3-4 years, and healthcare cost and insurance have been some of the areas that we have seen the most inflation. So, long-term care premiums are derived by looking at what costs are, looking at what costs might be in the future, and, actuarially working through to a premium. So, I remember when long-term care, early in my career, some 25 years ago, the major long-term care insurance companies, their claim to fame, the best ones would say, we've never raised premiums on existing policyholders. And, that held true for a lot of years, maybe even 10 more years it held true. But, what we've seen is that even the best companies have given rate increases to their existing policyholders. So, if it's just barely affordable, if the premiums are barely affordable for you in the beginning, you might want to really think twice about it, because you should expect those premiums to go up. So even with long-term care insurance, in most cases, you don't ever get your premiums back, even if you don't ever use the care that you would have paid for. So, if you're thinking about, sinking 40 to 60 grand or more into a long-term care policy over an average life expectancy, and then maybe never even using it, you're looking at draining those resources as well. And then even in my earlier example, those premiums really only got about $165,000 worth of care. So you have to really look at what you're getting too. You subtract the 50 or 60 grand that you may have paid for it from the $165,000 of benefits that you could get out of it, and you've only preserved maybe $100,000. So a whole life policy does have a special kind of whole life policy that is geared for paying for long-term care coverage. Does have the potential to preserve a little bit more. So the premiums are less likely to change if you get a whole life policy. Those premiums are usually guaranteed, and you can get a bigger pool of money, maybe perhaps bigger than that $165,000, since you'd be using a death benefit. And then if you never use the benefit, or whatever is left of the death benefit can be passed on tax-free to your heirs. So I do think that is, if you can understand the intricacies of it, I think that might be a better option to consider. So, first you have to consider, what assets do you have to protect? If you have substantial assets to protect, and you don't have enough assets to just outright pay for your care, then that's kind of the sweet spot for looking at these long-term care options. You have to consider, are you going to be able to afford the ongoing and likely increasing premiums for long-term care? You have to ask yourself, you have to find out, are you insurable? This kind of planning can be extremely complicated. We've really just scratched the surface of it. My opinion is that it's best to work with a fiduciary that can sell you any product that may be best for you. If you're working with a fiduciary that has access to all the products, their contractual obligation is to recommend for you what is best for your particular situation. You really should avoid going out and just getting quotes until you've done extensive homework about the different kinds of policies out there, because what is going to happen more than likely is that you're going to be dealing with a salesperson who can only sell a certain company or a certain policy, or maybe they can sell multiple companies, but they only have access to traditional long-term care and they don't have the other alternative products. So, you want to ask a lot of questions when you're working with a person, because, if you're dealing with a salesman that only sells widgets, to them, everyone needs the widget that they sell. So, and you should also know that whether it's a life insurance policy that has the long-term care provisions or the traditional long-term care insurance, there are hefty commissions that do come along with that. I'm not suggesting that salespeople don't, or financial professionals don't earn the commissions that they get, but you just have to go in with eyes wide open.
Thank you for that, Shana. That's good.
All right, a lot there. We have a call. Why don't we do it? Why don't we get to Mike? Mike's calling from Oklahoma. Hi, Mike. You're live on Financial Issues.
Good morning. How are you doing?
Better than I deserve.
I have a question about gifting cash to my son and to my daughter-in-law. And
Okay.
It's my understanding I can give $18,000 apiece. Is that correct?
That's what the limit is for 2024, yes.
Okay. My question really is, I have a variable annuity that I've had for 20 years. I have an IRA and I have a brokerage account. And I'm really wondering where I should pull the money from. And if you could just walk me through the process of how all of that kind of works.
Mm-hmm. Is your variable annuity qualified or non-qualified? Is it an IRA or was it?
No, it's non-qualified.
And I'm guessing you probably have a pretty big gain in it.
Yes, I do.
Okay. So the easiest thing to do is going to be to gift them money from your just your regular brokerage account. Now, I don't know how much cash you have there, if you have the cash to do it. If not, then you may have to sell some securities. That could potentially generate some capital gains for you. If you gift shares of stock to them, you're also gifting them your cost basis. In that case, it would almost be better for them just to inherit it at some point because they get a stepped up cost basis, but of course they don't get the use of the money now. So if you're looking at taking money from the variable annuity or the IRA, my next question would be, what kind of tax bracket are you in?
I'm in a low tax bracket.
Low tax bracket, okay.
Yes.
So then you got to decide, do you want to take a capital gain or do you want to reduce the IRA? I would suggest that the IRA is probably the best place to start. If you're in that 12% tax bracket, what I would do is, and I would do this whether you're going to gift them the money from this account or another account, I would take advantage of that 12% tax bracket. So I would work with your tax professional, figure out how much more income you can take to get to the top of that 12% tax bracket, and then move all of that money out into your taxable account. Pay the 12% tax on it, especially if your IRA and your annuity are the places where the majority of your liquid net worth resides.
Okay. So I'll be paying capital gains tax regardless of where I take it from then.
I'm sorry, could you repeat that question?
On my part, I will be paying capital gains tax regardless of where I take the money from, correct?
Well, if you take it from your IRA, it's ordinary income tax. If you have cash in your non-qualified investment account, you can just gift the cash. There's no tax associated with that. But if you have to sell some securities to get that cash in order to give it to them, then you may have some capital gains there. And if you take money out of your variable annuity, you're going to be taking out the gain first. So if you put in $100,000 and it's worth $200,000, and you start getting distributions, you're going to pay taxes on all of that money until you get down to the basis.
Okay. All right. All righty. I sure appreciate your time. You've
Absolutely.
been very helpful.
Thanks for your call, Mike.
Thank you.
Yep. Great question there.
Yeah, that's good.
All right. What do we have time to?
I'd love to squeeze a quick one in here, Shana. This was Brian and Kara over on the website saying all insurance premiums are rising. Are insurance companies a good investment?
Yes. Insurance
Sure.
companies have a great history of being profitable. That's, you'll notice that we have a preferred on our list from an insurance company. We've also in the financial area, we've got another insurance related purchase. So insurance companies are very, very good at managing risk. And that's one of the reasons that I suggest that we don't like annuities. we think that they're a fear-based purchase. People will gravitate to annuities because they hear the word guarantees, and they just really misunderstand what those guarantees are. And so insurance companies make a lot of money off of that trend. So,
Yeah.
And they're really great at managing risk. So they tend to be pretty profitable in a lot of cases. All right, folks, if you are listening on an outlet that only carries a short version of the show, we hope you have a way to catch the whole show, because we've got some really compelling reasons to get you to the ballot box in the last part of the show. For the rest of you, stick with us. We'll be right back.
It's easy to get caught up in the rush and forget about what really matters. Too often, we invest in stocks without knowing what they stand for. When your investments align with your values, your money speaks for you, because biblical values matter, even when investing. Learn how to invest biblically and responsibly. Visit financialissues.org to learn more. That's financialissues.org.
Through the ministry of Preborn, the Financial Issues family has saved tens of thousands of lives of babies. What an amazing job that God has done through you, the Financial Issues family. Would you join us in saving the lives of babies? What an amazing reunion we will have in glory, meeting all the people that we have saved. Please go to preborn.org. That is preborn.org or financialissues.org and click on the Preborn banner.
Remember the good old days when companies stuck to just selling their products rather than using their profits to push an agenda? When you invest in a company, you become an owner of that company. And more businesses are now using your money to fund woke projects. We're called to be good stewards of all we have, and that includes ensuring your investments align with your biblical values. Thankfully, that's where Financial Issues can help. For over 25 years, Financial Issues has stood as a leader of biblically responsible investing, encouraging the body of Christ to keep funds out of companies that dishonor God. We provide Christian investors with the tools they need to build fiscally and biblically responsible portfolios. We're at the forefront of the fight, helping you not only with your finances, but advocating for truth and godly wisdom. For more information, go to financialissues.org. That's financialissues.org.
Initially, when we became members, I thought, what if this doesn't work? I mean, we're going to give up this whole concept of insurance, and we're going to trust God and His people. And it was like, yeah, well, of course. I'm going to trust an insurance company to come through for me, or I'm going to trust the church to come through for me. And that's a no-brainer. I love getting the monthly share that I give to each month that has the name of a real person and their real medical concerns and a prayer request, for them. If I have a need, I know I can go get care. I can see the providers I want to see. I don't have to worry if they're in my network. And if we need medical care, the Samaritan is there.
A community of Christians paying one another's medical bills. For more information, go to financialissues.org and click the Samaritan Ministries banner.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only, and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it, and consult any financial professional you work with to make sure it's applicable to your financial plan.
Welcome back to Financial Issues. I'm your host, Shana Burt. Our phone lines are open. You'll be the next caller in the queue if you have a question. Call now. 610-363-1110 is the phone number to get in. And we need you to get in quickly if you have a call today, because we've got that compelling reason. We're making you hang on till the end.
That's right.
But a very compelling reason to get to the ballot box this voting season. Well, yesterday, the markets took a little bit of a breather following last week's record highs. By Monday's closing bell, the Dow was down almost a percentage point, the S&P down 0.18, and the NASDAQ down about 1/4 point. And oil was early this morning, oil was at 71.28. On the geopolitical front, Israel has announced that it will not target the Iranian oil fields. Too many rabbit trails in there to go down. But Saudi Arabia is ramping up oil production before election season, leading to a swift decline in oil prices. And we'll just leave you with this question. It raises the question of whether political favors are at play to keep gas prices low before the election. I saw a meme on social media that said, before you go to the ballot box, make sure that you go fill up your car, go by the grocery store, pay your mortgage, pay your insurance premiums, pay all your bills, take a look at your 401k, and then head down to the ballot box.
There you go. There you go.
Yeah, good thing. We are in the midst of earnings season for third quarter of the year. So let's just kind of take the temperature of where we are in earnings season. So on Friday, FactSet's an organization that puts together statistics during earnings season, and they said at this early stage, the third quarter earnings season for the S&P 500 is off to a mixed start. While the percentage of S&P 500 companies reporting positive earnings surprises is above recent averages, the magnitude of earnings surprises is below recent averages. In addition, analysts have continued to lower earnings per share estimates significantly for companies in three sectors. Those three sectors are healthcare, energy, and industrials. So of all the companies that have already reported, which is not yet a majority, of all the companies that have reported, 79% of companies have exceeded expectations. They've come in better than the 5-year average of 77% beating and the 10-year average of 74% beating. In addition, companies are reporting earnings that are 6.1% above analyst estimates, which is below the 5 and 10-year averages of 8.5 and 6.8. On the revenue side, 68% are beating forecasts, which is less than the 5-year average, but equal to the 10-year average. So what does all of this mean? Well, the bar is set a little bit lower than usual with all of the revised estimates that we saw last earnings season. So we get sort of a C if expectations are met. Consensus estimates for S&P earnings growth for this season is only 5% year over year. That's pretty lackluster when you compare the previous quarter, which saw a growth rate of 13.2% year over year. So we're going to be sharing some data in our commentary this week, presenting an alternative point of view to the narrative that you've been hearing from mainstream economists about the strength of the economy. If we dig a little bit deeper into some individual company reports, I've got some things to share with you from American Express. American Express is not a biblically responsible company, so we're not suggesting that you consider buying it. We're simply pointing out some things that they said when they reported their most recent earnings just in the last week or so. They said on the earnings call, I think when you look at the overall spending, organic spending is in our customer base is not as robust as it was in a more robust environment. And that's what our cardholders do. What our cardholders card holders, tongue twister there, will do is pull back slightly if they lose confidence, see any sorts of signs of their own stress, but they will continue to pay their bills, and that's why our credit numbers are good. So as a reminder, American Express serves higher income earners. So, this is a little bit different than what we've been hearing about the lower end consumer. They also said, I think when you look at the organic piece of this, you will see, especially within our small businesses have been hit from a macro perspective. I think just like a lot of other companies, small businesses in that organic spend or the same store sales spend that is occurring on the card in small businesses is certainly not as robust as it was in coming out of the pandemic. In fact, it is negative. It is that organic spend that's down. What that means is that if you adjust for inflation, real spending is down, even with small businesses. So small businesses have gotten hammered in this most recent interest rate. We're in a cutting cycle now, but as interest rates went up. So small businesses rely much more heavily on banks, especially regional banks, for their access to capital. So they make loans rather than issuing more shares of stock or issuing debt to the public markets like very large companies do. And so with the dynamic that this latest round of interest rate increases, it was the small businesses that got hammered more. And, we've seen that's been the real fly in the ointment when it comes to these jobs numbers. The jobs numbers a couple months ago that got severely revised down by 818,000 jobs that the government said was created was just disappeared with the stroke of a pen in their revisions because of their failure to estimate small business birth and deaths. So it is small businesses that have really taken the brunt of this, as well as the consumer. From Ally Financial, they said, we continue to navigate dynamic operating environment that includes volatility in interest rates and here it is, consumer that has been strained by cumulative inflationary pressures. That's the real story. The unique environment has contributed to more volatility in our near-term outlook, particularly on credit costs and margins, specifically on auto loans, and they go on to talk about that. I don't even think we have time to get to that next story, Seth. Maybe you can kind of set that up, what it is, and take us into that.
Yeah, absolutely, Shana. So the story that Shana was referencing, folks, Goldman Sachs, interestingly enough here, is predicting a paltry 3% return for the S&P over the next decade. Now, just for some context here, in the previous decade, the benchmark index had an annualized return of about 13% over the last 10 years. And according to the research from this article, the annualized nominal total return of 3% through 2034 would rank in the 7th percentile to the 10-year returns since the year 1930. So, folks, I'm going to keep you on that little cliffhanger there. We're going to go to the Ag Report here in just a moment, and then Shana and I will be back with more financial issues. You'll probably need to get your call in right now if you want to join us on the phones for today's show, because we've got a busy last segment. So 610-363-1110, number to call in. Here's Craig Haugaard with the Ag Report, and then we'll be back right after this.
This is Craig Haugaard with your Financial Issues Ag Update for October 22nd. Well, the corn market started the week higher and limited fresh news, although we did have some pretty good export sales. The weekly crop progress report showed corn harvest is now 65% complete. That compares to 47% last week and 55% a year ago. At the closing bell, December corn was 4 3/4 cents higher at 409.5. Soybeans rallied as rumors swirled that China had purchased more U.S. beans. Sales to China are still running behind last year, but are expected to pick up, with the theory being that China is going to be buying ahead of this election, as they fear that there may be another soybean tariff coming after this election, depending on the results. In any case, we had November beans 11 cents higher for the day at $9.81 per bushel. Wheat markets finished mixed as markets attempted to determine what implication Russia's new plans for wheat exports are going to have on export prices. Hard red winter wheat was also supported by disappointing rains in western western Kansas. At the closing bell, Minneapolis December wheat was 2.5 cents lower at $6.14. Kansas City rose by 1.5 pennies to close at $5.82 1/4, and Chicago was 0.5 cents lower at $5.72 1/4. Cotton futures had a positive day, although they remain range bound. At the closing bell, December futures were 121 points higher at 72.20. Livestock futures were mixed. December live cattle were 50 cents lower at $186, 82.5 cents per hundredweight. January feeder cattle finished down $1.25, settling at $244.25 per hundred. And December lean hog futures rose by 45 cents, ending the session at $78.27.5 cents per hundredweight. Class 3 milk futures moved back towards the low end of their recent trading range. When the closing bell finally sounded, November futures were 30 points lower, ending the day at $20.89. This has been Craig Haugaard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.
Are you a Christian seeking to align your investments with your faith? I'm Shana Burt, host of the program Financial Issues. During our program, we share valuable information about the financial issues of the day, including how markets and the economy are moving and how public companies are behaving, helping you to make wise decisions with your investments and the money that the Lord has blessed you with. Using biblical standards, we provide you with valuable financial insight based upon Scripture, making it easy for you to invest in a way that aligns with your values. I can assume that most of you have investments in a 401k or IRA, but what I am sure of is most of you have no clue that the companies in your mutual funds may be funding the LGBTQ agenda, pornography, abortion, the list goes on and on. By listening to Financial Issues, you will learn how to get rid of those investments that are dishonoring God.
Become a partner today by simply going to financialissues.org/join. Click the green button to become a partner today.
Navigating through investment options can be challenging, especially when you're determined to uphold your God-given values. Every dollar you invest is a vote for the world that you want to live in. Let your values guide your investment decisions and help to shape the culture in which we live. Become a beacon of light and pave the way with biblically responsible investing. Timothy Plan, where faith and finance collide. Before investing, carefully consider the fund's investment objectives, risks, charges, and expenses of the investment company. This and other important information can be found in the fund's prospectus. To obtain a copy, visit timothyplan.com or call 800-846-7526. Read each prospectus carefully before investing. Investing involves risk, including the potential loss of principal.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Welcome back, folks. Hey, before the Ag Report, Shana was talking about earnings season, and we were teeing up an article that we saw in our research. Goldman Sachs recently forecast the S&P 500 will only see a 3% annualized return over the next decade. Shana, I had mentioned right before the Ag there that this annualized nominal total return of 3% would rank in the 7th percentile to 10-year returns since 1930. What do we make of this?
Well, it's interesting, and that would be, if that came to pass, that would certainly be a big problem for many people because, my outlook for inflation is that it will probably be higher in the 3 to 4% range. Yeah. So that essentially means that, for a balanced portfolio, if their prediction came true, you'd have a really hard time just even staying above inflation. So, it's interesting. It's scary if that's what happens, but I think we can take it with a grain of salt. So we would be well served to remember that it was this same Wall Street firm that predicted that the market would drop another 40% on the day that turned out to be the end of the Great Recession back in 2009. So Goldman Sachs put out an article titled "How Low Can Stocks Go?" in the Wall Street Journal's Money and Investing investing section on March 9th of 2009. It was a question that many people wanted to know. I mean, many people had already seen the indices drop more than 50%. And now here's a reputable Wall Street firm saying that the S&P, which was at 700, could potentially go down to 400. So that's, another 40% drop or more. And the Dow was on its fourth straight week of losses when this article came out. The S&P, like I said, was below 700 for the first time in 13 years. So almost anything is possible, especially under the next administration. And I say that whether the next administration is red or blue, if they don't make it a priority to work toward fiscal responsibility. This out of control spending, spending way more money than is generated in revenues from taxes or tariffs is going to be our undoing. Businesses and households cannot thrive long term when we allow inefficient, corrupt, and inept leadership to spend us into oblivion. So, you've been waiting for it. Here it is. Are you still undecided on who to vote for? Worse yet, are you so undecided or so disgusted with the choices before you that you're going to not go at all? Well, I believe our audience is predominantly Christian. I believe our audience is predominantly in the camp of Jesus followers. So if you love Jesus and you have devoted your life to being one of his followers, you need to know that Kamala Harris has mocked a rally attendee who shouted, "Jesus is Lord," in the middle of a speech promoting the abortion industry and her party's stand on abortion. Don't take it from me. Here it is, straight from the donkey's mouth.
With the intention that they would undo the protections of Roe v. Wade, and they did as he intended. Oh, you guys are at the wrong rally. To go to the smaller one down the street.
Wow. It's almost.
I think we can end the show there.
Yeah, right. It does leave you speechless, Shana. It's just so sad. It's so sad.
Yeah. The smaller rally down the street, I think she was referring to the Trump rally that only had a reported 7,000 people in attendance versus the 2,500 that was in her crowd. So, not only does she mock God, which is the most reprehensible thing that a person can do, she can't do math either.
Yeah, seriously.
It's just... We were talking during the break, and you said, can you believe that she's actually saying this? And I said, yeah, I can. She's finally telling the truth. She's finally exposing what is behind what is driving all of the policies. Yeah. And that is that they reject God and that they mock God.
That's exactly right, Shana. Yeah, I mean, this is what we've known this all along. We know that these people hate God. We know that their hatred for unborn children and their love for appeasing every leftist agenda, that comes from a heart that hates God. And Shana, it made me think. We're talking a lot about spineless weasels and calling out the spineless weasels in Washington D.C. But if I may speak freely for just a moment and humbly as much as I can, I believe that Christians who choose not to vote. Or who choose to, perhaps make their pietism more of an issue, I believe the argument can be made that they are contributing in being a spineless weasel. You have got to take a stand. You've got to take a stand. If you're a Christian and you don't have a hatred for this stuff, my question is, how can you have the love of Christ in you? You've got to take a stand. You got to have a spine. Yeah.
So we can talk all day about the arguments on whose economic policies. I mean, this is financial issues, right? Whose financial policies are going to be better, for the country, for individual Americans. Obviously, I think the policies of Donald Trump are going to be better for the country from an economic standpoint, but there's still challenges. We've got to get this out of control spending under control. It's just, it's going to be our undoing. We can say goodbye to what we have left of America if we don't change this. But more than anything else, the reason that we're in the condition that we're in is because it's a spiritual issue. This country, believe it or not, was founded upon Christian principles. When they were writing the founding documents of our country, they stopped. They came to an impasse, and they stopped to have a prayer meeting. So this country was founded on Christian principles. That's the bottom line. And the progressives want to move beyond that because we're better than that. They want to be unburdened by what has been. Well, what has been was a love for Christ, a love for freedom, a country that was founded on religious freedoms, the ability to worship the God that we believe in without hindrance. You can go on with the rest of what's in the Constitution, the right to keep and bear arms, freedom basically from big government controlling and getting involved in our lives. But that's not what the left wants. They don't trust individuals to manage their own affairs, and they want to be in control of all of those issues. So, share this clip with your friends. That should be enough right there. If somebody mocks your Lord and Savior, now you know the heart behind all of their policies.
Yeah, it's well said, Shannon. And, I think we'd be remiss if we didn't remind our listeners as well that preborn is standing in the fight there. Every time Kamala Harris and her camp takes a shot and tries to take that shot at unborn children, preborn is there like a shield, doing the work of the Lord and standing up for not only the babies who are living every day in danger of their own lives being taken away, but also of the mothers who just have to go through that horrible trauma of it. Preborn's there. So it's good stuff. And
to see the crowd cheer when Kamala said that, it just reminded me of the scenes you see about with Pilate and Jesus when he brings out Barabbas, and they choose Barabbas.
That's right.
It's that's the world that we're living in today.
Yep, absolutely.
We need revival. We
do. Amen, Shana. Yeah, it's good stuff. Might have time for one question here to close the show, Shana. Brian is saying, I've been a partner for several years. Never really included preferreds in my portfolio. I don't really understand them. Could you explain how they work? I'm 56 years old. What do you think?
Okay, so preferred stocks are technically equities. They're an equity offering that it's one way that companies will raise money to continue their ongoing operations, and they work similar to a bond. So they're offered at a par price the first time that they're issued to the public. That price is usually $25, and they pay a stated dividend rate based on the par value. So you're going to get a steady stream of income. Most of the preferreds that we try to get are cumulative. Preferreds have been few and far between and really hard to come by. So if they get called in, that means the company is going to pay off their debt. They don't want to pay the dividend anymore, so they're going to return your principal to you, and they return it at $25. So, there's a little bit of a difference there if you buy it above or below that par value. And then you get that interest rate, you get that dividend interest as long as you own the preferred. There are some that are convertible to preferred stock. You'll see that in the description, though. But I think it's a great alternative to traditional fixed income and a great part of your fixed income allocation. Well, we're at the end of the show for today, but we hope that you'll come back tomorrow because, Lord willing, we will be here to remind you time's getting short. The Master is coming back, and we want to be here to help you be found a good and faithful steward with everything that you've been trusted to manage. Come back tomorrow for more financial issues. Find out more about our ministry at financialissues.org.
we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.